Hey YouTube, what is up? Connor Beck here. If you're looking for more personal finance or business content, please subscribe and leave a like on this video. Thanks so much, I'd really appreciate it. No, this isn't clickbait. I will really reveal to you an underutilized investment account that most personal finance content creators don't talk about. Today, we often hear about so many different tax-advantaged investment accounts like the 401k and the traditional and Roth IRA. These accounts have a lot of different benefits. Some of these benefits can include allowing you to contribute pre-tax income, which really means you can delay paying income taxes on the money you put in, allowing your investments to grow tax-free without triggering a capital gains tax bill, and allowing you to withdraw your investments tax-free. But as always, Uncle Sam eventually wants to get his cut. So there's really no accounts that offer all three of these benefits, right? Well, actually there is. Let's dive into why the health savings account, also known as the HSA, can help you unlock tax benefits that no other retirement account can. And before we dive deeper into this, let me add the disclaimer, this is not specific investment advice. I'm just showing information that I have learned about a specific investment account, but please consult with your own professional before making any financial decisions based on what you learned in this video. With that being said, let's jump into it. HSAs were first created when George W. Bush signed the Medicare Prescription Drug Improvement and Modernizations Act, which established Internal Revenue Code 223. As I mentioned earlier in the video, HSAs are unique in the way that they allow you to contribute pre-tax earnings to your account. Your investments within the HSA grow tax-free, and you can withdraw the funds completely tax-free with one caveat. Those funds need to cover eligible medical expenses. And the great thing with that, there's no time limit on how far back you can go to use a medical expense to make a tax-free withdrawal. The only rule is that your medical expense must have taken place after your HSA. So what does that look like exactly is probably what you're asking. So for example, let's say you open an HSA account and the year is 2022. You invest $500 a month with an average annual return of 8%, and you do this for 20 years. After 20 years, you'll have a little over $280,000. Now let's say you incurred $50,000 in medical expenses over those 20 years. You can withdraw that $50,000 tax-free and leave the remaining balance in your HSA to grow and cover future medical expenses. So you might be asking, is it possible to put too much money in my HSA? What if I have way more than I need to cover my medical expenses? Well, that's the good news. You can't really put too much money in because when you turn 65, the HSA basically turns into a traditional IRA. You can still withdraw money tax-free for covered medical expenses, but you can also withdraw money for any other reasons besides medical expenses and pay regular income tax on it, which is how a traditional IRA works. Now remember, that's after you turn 65. But before you start looking to opening an HSA and dumping money into it, there are a couple other stipulations when it comes to these accounts. To be eligible for an HSA, you must be covered by a high deductible health insurance plan, which typically means having a deductible of $1,400 for individuals and $2,800 for families. Please consult with your medical insurance provider on your HSA eligibility. The next point is the HSAs have a contribution limit of $3,650 for individuals and $7,300 for families. This includes any employer contributions you may get for your HSA. So make sure you follow these guidelines so you don't get in trouble with the IRS. And of course, there may be other requirements you have to meet that I didn't discuss here. So as always, it's important to do your own research on this. But if you are eligible, these can be a great investment tool to help you maximize your investment growth as much as possible. I personally also like having the added benefit of knowing that my medical expenses are covered for the foreseeable future through my investments. And that's gonna do it, guys. As I said, if you enjoyed this video, please leave a like and please subscribe to the channel for more personal finance and business content. Thanks so much, I really appreciate it.